Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-session update for Thursday, September 3rd, 2020. I wanted to get a quick one out to you guys. I'll cover another update on the markets, only because for the first time in forever, we had some decent sell signals, so I wanted to update you. Things move fast when, when there's a lot of pent-up excesses in the market. So I'll touch on that, give you my thoughts where we're at right now today, kind of give my very near-term thoughts. That gets a little harder. I call those micro calls. Where do we go from this point, through the end of the day into tomorrow? And then also kind of the more macro call, meaning longer term out, days to weeks instead of minutes to hours. All right, so let's start there, and then I'll also touch on gold. I want to do an update on gold and silver. Just because we have sell signals on the market, that's not the only thing, that at least that I trade. I always try to spread my eggs around in different baskets. So I want to update there. The VXX trade as well. Now that's pretty much falls in line with the stock market analysis if you're looking at the VIX or the VIX tracking ETNs like VXX. And then coal stocks, kind of flying under the radar. But I'm liking what I'm seeing in that sector, so I'll do a quick update there as well. All right, so where are we at? This is NQ, the NASDAQ 160-minute chart. There was our sell signal this morning right there on the breakdown, and we followed through. Again, did the update this morning, kind of zeroed in on that, showed you the 360-minute candle closes, and then the impulsive selling started. And this is what happens when you get these extreme imbalances in the market, you get these swift drops. So today, that's probably it for today. No guarantees, but I think that's it, at least near term. I'm giving you my very near term outlook right now. And we were down more than that. We're down 4.38% in the NASDAQ 100 futures. Remember, they start trading in a different time. We're down 4.2 right now. Actually, about the same in QQQ. All right, so that may start at the today's open. Either way, there we are. We hit that 11, that first target there. That's 11,728, I think that is. Let me just pull it in a little tighter. There it is, 11,728. Now, I posted an update on the home page. Let me show you that. Okay, I understand in a fast-moving market, these videos aren't, it's probably easier for you guys if I put out static charts, and I do that. I'll typically do that underneath the last post, anything related. In other words, the video today covered the broad markets. So here's the update I posted earlier today. That was about, I'll refresh the page, and where was it? Down here somewhere, got buried down about 24 minutes ago. 11,728 unadjusted target hit. Remember, NQ, as QQQ is now, these are unofficial trades. What does that mean? That means I don't make the normal price adjustments. If you see T1 equals, that's the actual target. So down here, I did the video this morning. I told you wouldn't be surprised if we didn't get much of a reaction there because of all the pent-up excesses, and we did. We went on down through there. Again, this was this morning that I posted early in the session before the market opened today. The chart's always time-stamped. This was an hour before the market opened. You could see there was our breakdown triggering the sell signal, and then there's that 11,728 level and the trend line support. Now we went quicker than that. That's why they didn't intersect. Again, that was this morning's chart. Let's go back. This was the updated chart I posted. As you can see, it was pretty much a waterfall down, little reaction there, and that's that 11,727.90. The Q's trade in quarter point increments, so rounded off, that's 11,728. And again, these are the actual support levels. I say this often when I make price targets on official trades or my own trading. I always cover a little bit above. If I'm short, I'll cover a little bit above the actual support level that reaction's likely. Because quite often the buyers may step in early. Sometimes you'll overshoot a support level too. I call that a momentum-fueled overshoot, but other times you'll reverse just shy. If everybody's looking at that level, everybody's looking to cover, the buyers are looking to step in, then sometimes you'll reverse. So that's it. That was hit at the very same time. Again, that was the update posted. Here it is right now. There's our bounce off that level so far, and we came within basis points of that. So effectively a hit again. An official trade, the target would be set just above the actual support level. The S&P 500, let me pull that up for you as well. I think I covered that one in the other video today. ES, stock futures. You can see at the same time that NQ hit or effectively hit that support level, ES hit that 34.47 target that I had right there. And so what you have are two of the major indexes falling down to support around the same time. And just like NQ, it reversed just a hair shy. So there it is. There's a bounce. Now, that's why I do these videos. Where do we go from here? Well, we were extremely oversold. This is the biggest drop we've had in many months. So you're not going to go down 10%. You're not going to hit circuit breakers. I've never seen that from a market that was, just 2 days ago at all-time highs to going down to where you're hitting circuit breakers. So point is enough today. That 4+% drop in the NASDAQ 100 is certainly probably it for right now. So I think this is a level, or so far it was, that we bounce. Where do we bounce to? Well, that would be your first objective point to re-enter shorts, or to, if you're playing a bounce for long trades, cover right there. We could certainly go up more. To me, again, it's all about the Qs, meaning NASDAQ 100 or QQQ. So what I'm looking at is the most probable bounce target would be the same first target zone right here. You had a cluster of, reactions above and below, a little sideways trading there, reaction from above once you broke above it. So this would be a likely bounce target zone. Remember, support once broken becomes resistance. It's that simple. So now you're where this was support before, it's now resistance from about 11,940 and change to about 120.10 or 12.010.50 or so. So that's the most likely bounce level. And these are pretty solid sell signals. They're going to do some damage on the daily charts. Look, if the market can somehow manage to get back up and regain all this, let's say it goes back for a back test of the trend line, would that be an objective entry? Yes. Is it going to do it? I don't think so. But it's going to be pretty darn bullish if it can recover most of this and get back above those highs. If we can stay down below there, a lot of what's going into my analysis right now is those traders that got trapped buying Apple and Tesla after the split. There's your 4-for-1 split. They were all good. And then yesterday something different happened. You had the bearish engulfing candle. So if you bought the day of the split, you were still okay because we closed, the fat part of the candle, the bottom part there, the body, shows you that we closed around the high. So nobody was really underwater that bought that day. People that bought the day after were underwater, but not by a lot. Today they're underwater by quite a bit more. And also at this point in time, everybody that bought, during the day of the split or after, they're underwater right now. So these are kind of big technical levels because of that. If you can get back up there, then those that chased it, are going to be rewarded. Their losses are going to be erased, and that would be especially to take out this bearish engulfing candle, meaning move back above it. That's nothing but bullish. Ideally, this is a sell signal, bearish engulfing candle, and to me it's more the confirmation, the confirming candle. A bearish engulfing candle, sometimes you get them during an uptrend and it doesn't make a difference, the uptrend continues. It's the confirming red candle, and as I like to say, the redder the better. So if somehow we dump into the end of the day and this candle closes down here, a big red body like this, I know I'm butchering my drawings here, but I think you know where I'm going with that. Here's your body is, it's showing you the open and close, and this is the daily high, the daily low, the skinny parts. So if this candle would look like this today, or as long as we close red today, get a red candle, and then, which I think this is the most likely scenario, and then follow up with an additional red candle tomorrow, that would help to confirm this as a, and believe me, bearish engulfing candles are potential reversal sticks, they're topping sticks. So it could have, and should have longer term bearish implications. But first things first, we fell quite a bit. As I showed you, the indexes hit, tagged, and so far held those pretty, those second target levels. Again, I think that's it for today. Maybe we come down, retest those lows, close down on or around that level today. The trend line support's not far below, but I'm leaning towards, the buyer stepping in here and saying, oh, I've been waiting to get in for a long time. Everything's down today. I can buy Apple, at or just before where it's split. So I think you get that first round of dip buyers that are waiting to come in. Maybe they take it up here, and then the next big wave down comes. And if we start to get that, this is what I can tell you. Near term, it's hard to make those micro calls. I like to do them. Sometimes I eat crow, but that's what what I do is tell you where I think things are going. But bigger picture is this. I just zoomed out on the NQ chart. If and when whether we get a bounce or not, we take out these lows and this support level right here and this trend line. There's a pretty good trend line right there. That's going to open the door for additional downside here to this maximum. Currently that's the target I'm looking at right now. Whether it comes in the next couple days or the next couple weeks, down to about 11,274. And if it happens, I think it'll be impulsive. So maybe some flagging action here, some bouncing, consolidation. That would be a flagpole, but bull flag pattern. Again, I'm just looking at what could form, one of many options. And then if we get it, then look for the breakdown. Look for a break of these support levels, the trend line, today's lows, and you'll probably get another impulsive wave down. So if you missed today, or if you caught it, either way, I think there's going to be another move like this coming. But like I said, odds favor maybe a little consolidation here first before we get it. Not necessarily. Sometimes, again, there were a lot of trap longs. We hit extremes not seen for years in some indicators, everything I went over before. So don't underestimate just how far and fast things could fall. So those are levels to watch and how it may develop. Again, that's what I like to get out there, is that you have to move fast in a market like this. Or you missed the move. Oh, let's talk about the, let's go to the SPY and QQQ charts. I know a lot of you don't trade futures. I like to watch that. 60-minute chart of SPY or QQQ. There it is. We hit the T1 zone. We did break it. And look, okay, I need to point this out. In the update this morning, I didn't list any other support levels or targets until the trend line, but that doesn't mesh with my chart NQ, and that's why I like to watch all of these. NQ, I did have support level right there, and so natural and QQQ, I should have added one, and it's about the same level. I'm doing this in hindsight, but again, that's why I cover all those charts, and sometimes I might miss a line on QQQ as I did here. There's a gap right there, and that's right about today's low and a reaction high. So that's where I should have had, in hindsight, and my apologies for not catching that, the second target, with that being the third target. But again, it was outlined in advance on the NASDAQ 100 NQ right there. And so a lot of traders like myself are buying NQ, some are buying QQQ. We're all out there, and buying pressure in one or the other will lead the indexes up. If you have enough buyers or sellers, that's what's going to bring it up or down. So it doesn't matter what vehicle you're trading. These are the most popular ones, QQQ and NQ, but there's other things out there that are affecting, the NASDAQ 100. So there it is. Those are your levels and how things are likely to play out. Again, probably seen most likely the worst for today, and if we do have another jog down, I think it'll be just a marginal low, maybe come in and actually kiss those levels that we reversed just shy of on NQ and ES, maybe even overshoot them a little. But again, when I jump back and forth here to the NQ chart, you have not just price support below, but you also have trendline support as well, and I doubt we're going to see this today. Probably see it best this, and maybe something else like this, some near-term consolidation and or bounce, then take that out tomorrow or the next day, or that'd be actually Monday, so maybe tomorrow or next week before we get that next jog down. All right, let's go to SPY for your SPY traders as well. Showed you that ES already hit support. I think I showed you SPY hit that first target there. Kind of in no man's land on SPY, the S&P 500, although there are some reactions right there. I'll put a line. You can see a couple small candles, minor reactions. And again, on ES, on the ES chart, which I think I already showed you, I did have a level there, and you can see it. And this is why I like to use the futures. Futures, show the virtual round-the-clock trading, trading nearly 24/7. So you have more reaction points you can pick up that some of those may have occurred outside the regular trading hours you're going to see on SPY. And so that's why I had a target level there, and that was hit. So there's your bounce back to resistance. But NQ still has a little more upside, so it wouldn't surprise me to see ES, and SPY come up a little bit more. Again, my primary focus is on NQ right now. I think that's where I have little doubt that's where the hot money has been lately, and it's that hot money that's going to determine where we go next. Okay, let's move on. I think I covered, yeah, I already covered SPY, and let's look at the VXX trade. VXX came very close, but just shy of our first target. It's hard because the VXX is an instrument that tracks an instrument that tracks what we're trying to gauge here, and that's the VIX. Remember, as I said before, you can't buy the VIX or sell the VIX, as try as you may. It's the VIX right here. Hit my first target at no, second target. I'm sorry. After the breakout, we had the bullish falling wedge breakout. My first target was 25.58. We hit it. We consolidated a few days on it. Finally took it out today, and then boom, in one fell swoop. Once the breakout was clear, we moved up and hit that 31.20 target. So bottom line is the VIX hit the resistance level that I was targeting for VXX, but VXX does its best, but it tracks near-term futures, and although I adjusted the price target down, you can see as I hover there, I was real tight. 3104 is that horizontal line. I set the target at 3102. And I did that because that initial surge usually is pretty big. And we still may hit it today. Don't get me wrong. We dump into the close, take another jog down, like I said, take out the lows by a little bit. We may hit this today. And I still have all the confidence it'll be hit soon. I just wanted to say that so far the high of the day was 30.88. Very close to that first target. And I still maintain these additional targets here for now. By the way, again, I talked about all these excesses built up in the markets. Don't underestimate just how a market can go from being super uber bullish as it's been recently to super uber bearish. And remember that stocks tend to fall much faster than they rise. So where am I going with that? One of the things I like to do at times, and I may do this time around, is just set a stop and let it run. When the VIX did this back then at that last big move in early January, we were long at the time TVIX, which no longer exists, but this was TVIX. We hit our first, second, third targets. The gain was, I forget where we entered, somewhere on the breakout or the back test. I don't know what it was. I think we had a 70-something% gain. I can't remember. I know it was well into the double digits. I'm trying to grab a measuring tool here. Maybe, I don't know, that's a 100% move from there, but I think we were where our entry was. I think we made about 70%. That was the final target. I also gave you a potential fourth target right here. That would have been about 180, call it almost 200% move, but it kept going. And I might have mentioned at the time, you can either take profits at these target levels or let it run. Sometimes you get a runner trade, whether it's Apple off the lows. I was bullish and long, all things tech and Apple and all that on the March lows. I just grossly underestimated how far the Fed could carry this market. So point being, what I'm good at is calling inflection points, tops and bottoms, and it's sometimes hard to identify just how far a trend is going to go. So, it's one way to use my analysis, or complement it with your own, is where to get in or out of a stock. And then if you're more of a trend trader, just trail your stops up and let it run. I'll tell you, VIX is volatile, so the pullbacks are going to be, usually in the double digits. You can't run a 2-3% stop. You can try it, but you're going to get shaken out along the way on the pullbacks usually. But there's nothing wrong with that. Sometimes you run a tight 5% stop, and it may work for a while, may have stopped you out here and still milked more of that trade. You're going to see this one still trading, but remember, the company doesn't support it anymore. It's kind of weird how they do that. It's trading, I guess, over the counter now. And that's why we're using VXX on this one. So that's that. Just wanted to give you an update on the trade. VIX hit support. VXX effectively hit my support, again, within a resistance, within a couple pennies there. Reverse shy today, and I still like that one. Okay, changing gears. For those that want to, hear me talk about something else. Still same outlook on gold. Like the markets, it continues to walk up this trend line I have here on the 60-minute chart. This is GC, gold futures. I got better read on this because, again, you're seeing nearly 24/7, around the clock trades, some more candles to identify trend lines and things like that. So where we're at right now, we're testing again that trend line. We bounced off it several times recently. If and when that goes, that would open the door to my target zone down here from about 1844 to 1815 or so on GC gold futures, which would represent about another 5% or so downside if hit. Let me remove that trend line. Again, it's going to be all, to me, I think it's mostly, if not all, about the US dollar. Here's DX dollar futures. It's highlighted the other day. We did finally break out of this trend line after a few false starts, a little attempt to break out. We broke out. We still have the downtrend line from right here, those candles. I extended that out here. Comes in about that 93, 191 level. If we can power on through there, that should open the door to that next target up there, about 93, 954. And if we can break above that, that would open the door ultimately to this, what I call right now my maximum near-term swing target, if that makes any sense. In other words, where I think we get there, we're likely to have a pretty good reaction in the dollar, pull back, and that's where, especially if gold hits support at the time or close to it, and silver, that's where I'd cover those shorts and maybe reverse long for a bounce with an expectation that the dollar pulls back from there, or at least consolidates. So that's it. There's your big bullish falling wedge. There's your breakout in the dollar. And if each of these resistance levels are taken out, that's going to increase the case. But I want to be clear, the dollar broke out. And gold is sitting right at support precariously right now. If it goes much lower, it'll break that support. Let's look at silver real quick, because as I said recently, I think you get more bang for your buck. I don't know where my silver chart went. Interactive Broker's been quirky lately. I might have to redo the lines. They can roll these futures. Continuous contract. Here it is. All right, so we don't have any lines. I can give you a trend line right here. Just received a price alert on NRP. I'm going to get to the coal stocks in a second. I don't know if you heard that buzzer. I'll have to study this chart a little bit, because what happens when they roll the futures to the next contract, they stop supporting. That chart no longer loads. The old one, they're now on the December contracts for the continuous. But bottom line, silver will fall if gold breaks that trend line support and the dollar breaks out. Silver is going to fall, and it'll probably fall more than gold. And so there's some potential levels to watch. I wouldn't call that a target, more so a support level that, if taken out, probably brings silver down to this trend line. All right, let's go on to the coal stocks here. All right, I just had a price alert on NRP, so we'll start there. Let's see, NRP. This is one of several. It might have triggered the alert a little early. I had the alert on a break of this trend line, and it technically, it's at it right now. It needs to get above it. So a little more upside, plus you have 1194's resistance. But I continue to like these. Now, if it breaks above that, what it's going to do is break above this triangle pattern. You have a pretty well-defined trend line, which is probably the most important level, if I could pick just one level on this chart. But I would be remiss not to point out the price support just above it, around 1194, give or take. So I really like that, because if you break 1194, you've taken out both the trend line and price support. Probably get a swift move up there to my first target, relatively swift, and that's 28% or so of hit. And then if we continue to go from there, about 65% up to the next target. If you're wondering, well, Randy, right now your intermediate term, which I am bearish on the market, thinking there's more downside to come, whether we bounce here or not. Why would you want to go long anything? Well, these stocks fly under the radar. These are typically, I don't think any of these in here are components of the S&P 500 or the NASDAQ 100. And there are times when you go into correction mode in the market, and then certain little obscure sectors that fly under the radar have very little, if any, correlation to the broad market. Those are the ones that often rally. So. And at the end of the day, I like to spread my bets. Don't put all my eggs in one basket. So this is a sector that I've been nibbling on. And if and as these break out, here's HCC broke out today. It's got the 200-day moving averages above it, right above it. I don't know if you can make the red and blue lines out. That's the 200-day exponential and simple moving average. Really should give you one other line right here. That's not the tool I tried to pull. Let's get rid of that. Delete. And put a line tool in here, horizontal price right here. And what I'm doing there is I noticed it's been consolidating right here in this range right here, this stock. So really about 1646, 1650 should pop the stock if you can take that out and run. So I'm going to rifle through these quickly. That was HCC. Here's Arch Coal. Arch Resources already broke out, mentioned before, a breakout and a back test right here. There was your breakout, ran into the 3507 resistance. Back tested the trend line, back tested again, finally went up started to rally and took out the 3507 level and it's been moving higher since. So if you took it on the breakout or anywhere around there, you're up about 15%, and it's coming up on the first target now, about close to it, a little more upside, about $41. But again, a constructive chart, bullish price action recently. RLP broke below the trend line here, but it's up today, and almost all my coal stocks, all but a few, are green. So if it can get back above there, then what it's going to give you, or give this stock, is a failed breakdown, aka bear trap. That might suck in some shorts there, shake out some weak-handed longs, and then the stock would reverse, come up here to that 385 target, first target, and if it breaks that, that should open the door to $5 right there. It'd be a nice move if so. SXC broke out the other day, as mentioned, ran into the 358 resistance, back tested, and it's consolidating so far. It's holding above the trend line, but it needs to take out that 360 level, or really you have a couple reaction highs above it. You want to be safe, wait for a breakout above Monday's high of 364, and that should open the door to these additional targets there. BTU broke above the downtrend line, regain that 252 support level after breaking it. So there's your little whipsaw or bear trap, false breakdown, whatever you want to call it. Also coming off a divergent low. So again, I'm looking at much longer term potential here. Multi-week or multi-month swing trades if this sector continues to firm up. About 23% to hit the trend line. 441 target if hit, that's going to be about a 62% return. If that 523 levels hit, you almost double your money from here, and who knows? I know it's coal, dirty old coal, but again, the sector, when it rallies, it can really rally. That'd be about 220% up to there, to that 867 level. NC, NACO Industries, needs to trigger a breakout above the downtrend line, and you can see the targets. I've covered these again in the past. NRP pushing right up against there. I think I started with this one. Yep, so we'll move on. CEIX, Consol Energy, holding that 495 support, offering an objective but somewhat aggressive entry because it hasn't really run yet. But it's TA 101. You find a trading range, you buy it from 495 up to the top of the trading range, about $6. That's about a 20. Let's just call it a 20% swing, and that's it. Watch, rinse, repeat. Buy the bottom of the range, sell the top of the range. Sell or short the top of the range, go down long to the bottom, or cover it and go long at the bottom of the range, go back up. These are 20% rises and drops, and that's it. And of course, stops just somewhat below. You're going to have these intraday fake outs, so definitely a solid red close below there, a daily close you'd want to stop out on. And sooner or later, if the sector continues to have momentum and more of these stocks break out, then I would expect the next run up to the $6 level, ultimately get a breakout and see potentially a lot more upside in CEIX. METC, inverse head and shoulders pattern, kind of floundering, needs to take out the 317 level to run to these additional targets. CCR, same thing, needs a breakout, hasn't done so yet. So these are what I'm watching. More and more of these break out, break the trend line, then you have to break 403 to open the door to the next targets. CTRA, 494 needs to take out. AREC, still holding above the 119 level. Thinly traded company, not one of my favorite, but if the sector runs, it certainly has a lot of potential. And then HNRG needs to break out above those dual intersecting downtrend lines. All right, let's wrap it up here, and if anything big happens by the close, I'll do another update end of day. Otherwise, we can pick this up tomorrow. And this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.